now to kind of finish off the more active getting started portion of this lecture, I'm going to go into arbitrage. It's been kind of a lot of requests. A lot of individuals I've kind of talked to, bringing them into crypto, getting them interested in crypto trading. It seems to come up more often than not. It is a little like more technical topic, but I do think it's relevant because it seems to come up entirely. When you have access to all these global markets, you need to be aware that different exchanges are going to have different exchange rates between different cryptos. So you can kind of like see an example of, say that Bitcoin in the United States is kind of denominated in US dollar. Say that equivalent is around $2,200, $2,300. If you go to a Japanese exchange or a Chinese exchange and you convert their local currency using kind of the prevalent Forex exchange rate, you'll see that it's like maybe a $2,500, $2,600 USD equivalent. A lot of people get very excited about that. They have access to all these exchanges. You can go ahead and sign up for OKCoin. You can sign up for Yunbi. A lot of people think that they can make tons of money kind of doing this arbitrage. But what they don't realize is that when you cash out, how are you going to get that money back? So that is kind of a problem. I know some individuals have made a significant amount of money. There was a huge arbitrage opportunity with some of the Indian exchanges a couple of months ago. I had a friend who had an Indian bank account and a US bank account, and he was basically able to buy Bitcoin, transfer it to an Indian exchange, sell it, transfer that from his Indian bank account to his US one, and then about every 3 to 5 days, he was able to kind of do that cycle and make quite a bit of money until the price kind of equalized out from other individuals doing that like him to kind of even out the prices between different continents. That being said, if you don't have a bank account in that country, if you don't have a way of getting it back, you can kind of get trapped there. Like I said, you could always kind of buy back into Bitcoin and transfer it out, but that really defeats the purpose, especially if there's some exchange fees, especially if you're waiting. If there's prices a little bit volatile, it evens out more, you can end up losing money. So just be aware that just because you see this arbitrage opportunity, kind of be aware of why that arbitrage opportunity exists. A few examples of that are, it's just basically supply and demand that can cause a lot of that. China, I think, is a very good example. A lot of their exchanges are much higher when you're converting RMB to USD, but that's because of the difficulty of transferring fiat currency out of their country. A lot of people are buying it, willing to buy it at a higher rate, so they have that flexibility of transferring that crypto anywhere in the world that they want to. So they're kind of able to buy it at that higher rate just to get it out. They're kind of willing to take that loss. What's also interesting about that is that there isn't necessarily the exchange rate that's publicly posted is kind of reflective of the confidence in the national currency in China. With the yuan devaluation, a lot of individuals don't necessarily think that exchange rate is going to persist, in the next week, month, year. So they don't necessarily see that as an accurate representation of the value. So they're willing to kind of spend their yuan at a higher rate to get it into some other investment vehicle, or just in general get it out of the country. You can also see an exchange like Bitfinex. They actually have some legal issues where they actually had a lawsuit against Wells Fargo. And because of that, all of their kind of USD withdrawals from the exchange back into the States were frozen. That really caused problems, with people being able to get USD out of the exchange. So people didn't want to transfer it in because they really weren't sure when they were going to be able to transfer it out. So because of that, there was this huge squeeze on the USD availability, and a lot of issues that arose from that. So you saw these like price discrepancies kind of arise from they're being able to transfer crypto in and out, but not USD out. So like I said, those are just a few examples. We really do dive down deep into these arbitrage opportunities, how to best spot them, and how to take advantage of them in the advanced course. But as far as this brief overview, just kind of be aware of that. Be aware of how difficult it is to get on the exchange, how difficult it is to kind of get liquidity in and out of that exchange. And then kind of the reasons for those price opportunities. You can take advantage of them if you're on the ball and you're set up correctly, but you can also put yourself in not so great of a situation. And just kind of wrap up this section, I think what's most important is that you need to make a plan. I think that many people struggle with trading because they just generally don't have a plan. You really kind of need to have your entries, you need to have your exits, you need to kind of know what profit level you're going to be happy with, and you really need to know when you're going to cut your losses. You need to kind of be aware of the greed that kind of happens when you start making extreme gains, and the kind of emotional state after you made a good trade. I know I personally, if I made a very good trade, I'm very happy. I kind of like take a little bit of time off. It could be a day, it could be 2 days, depending on how good the trade was. But I know that I continue to kind of keep chasing those gains. If I think I'm able to, double, triple my money, why can't I do it again? So I'll kind of be chasing that, and I won't be happy with a 20 or 30% profit. I'll kind of keep chasing that, and because of that, I tend to lose money after the fact. So it all comes down to kind of familiarity, just getting to know yourself, getting to know your trade. You really need to trade in a non-emotional way. Some individuals are very emotional, and that's just generally not how you should be looking at things. You should be kind of like analyzing them on a psychological level, on a fundamental level, on a technical level, but you shouldn't be emotional when you're kind of viewing that. And kind of another cliche that I think is important for everyone to know is that no one ever goes poor from taking profits. It's kind of this old adage that people always say, but it's saying, if you're getting 20-30% gains and you actually cash out and like take those profits, those are 20-30% gains. Compared to a lot of the other major indexes, that's really good. You need to maintain perspective, like I said. If you're kind of comparing it to conventional markets, that could be amazing. But just don't get greedy, and all of a sudden your 20-30% gain can turn into a 20-30% loss very quickly. So just kind of go into it with a plan, go into it knowing where you're going to kind of exit, and you have to base that on something. Like I mentioned before, there are a lot of different trading techniques. Some are based on technical analysis entirely. Some are based on kind of market sentiment. Some are based on kind of psychological levels and psychological sentiment in general. So a lot of people combine a lot of those together. We are going to go through it in the advanced course in depth, different trading techniques and styles, and kind of expose you to what those look like and how you can utilize them and access them to the best of your capability. But just to go over this course, we're going to basically kind of expose you to those terms, topics. You can do some research on your own and kind of see what would work best for you. Like I said before, the biggest thing is to kind of know yourself. You really need to get familiar with how you're trading. You need to get familiar with how you trade after a good or a bad trade. And that's why I kind of suggest, necessarily paper trading is good, but you can't really learn that until you have some skin in the game. Some people get extremely emotional when they're trading for actual money. It could be a small amount, it could be a large amount, but paper trading might not help you learn that. So that's something we're also going to cover in the advanced course, how to go about best doing that, how to go about best learning yourself without losing a significant amount of money. A lot of people who got into crypto trading had to lose a lot to kind of gain a lot. It's kind of the price that you have to pay for that experience, but hopefully we can kind of consolidate that into as short and efficient period as possible, so you don't necessarily have to do that. So you can kind of learn your lessons from people who've been in this space for a significant amount of time.